BP, Europe's biggest oil company, out with results this morning. Profit down, but oil production up. Elliot Gotkin has details. Elliot?
Yeah, morning, Alison. Yeah, mixed results on the surface, but actually pretty good news for BP. Second quarter profit at BP halving to just shy of $4.5 billion after oil prices themselves halved and demand for fuel dropped. Now, analysts were looking for just under $3 billion, so these figures some 50% higher than analysts' expectations. But the key figure to watch out for here is production, and BP saying that output rose 4.5% to some 4 million barrels of oil equivalent a day, and that'll keep growing in the second half of the year. The shares, though, I can tell you, are down by just over 1% this morning. They're down about 2.5% for the year so far. But while BP's production has been rising, Shell's has been hit by militant attacks in Nigeria, and Total's in France by OPEC supply cuts in Angola. And that all adds up to a potential return to form for BT, and with it bragging rights as Europe's biggest oil company, just like it used to be. Now, BP first usurped Shell when it took over Amoco in the year 2000, the US firm, of course, but lost its way in about the year 2006. Production problems, a combination of them under the tenure of Lord Brown, and BP really reaching its nadir down here in September 2007, lagging Shell back then by some £22 billion in terms of market capitalisation. That's after its flagship Thunder Horse platform in the Mexican Gulf was hit by hurricanes as well. That cost it dear, but now BP, as you can see, is climbing back up, and Thunder Horse is back on track. It's pumping again, and that could propel BP beyond Shell to become once more Europe's most valuable oil company. Credit for that turnaround goes to Chief Executive Tony Hayward. He can't do anything about a dearth of demand growth, but he has been working on keeping his promises to boost production, to cut costs, and also to revive some of that investor confidence that was lost. And on that cost-cutting issue, they've already, he says, BP has already exceeded its target for the year of $2 billion of cost cuts, and that this year there will be another $1 billion worth of cost cuts, so more than analysts were looking for. But the shares, as I say, down by about 1% so far in trading.
All right, Elliot, thank you.